How to overcome cash flow problems, right? Right. We talked about that yesterday exhaustively. Then today we are going to talk about costing the product. Costing. Right. You know, you as a business person, for your business, no, don't worry, I'm gonna send it to you. Don't worry. Don't worry. Right. You need to be able to cost your product, right? Because if you don't know how to cost your product, you end up shooting yourself on the foot, right? You will not be able to establish a good price. So we say costing the product is vital, right? So the process of costing is about the process of working out how much is going to cost you to produce your product. If you are producing something, making something, you need to take into consideration every minute things that needs to go in materials, labor, overhead, a lot of stuff, right? Costing product for big companies or in big companies is a career officer. We call it cost and management accounting. They are the one that cost that do the costing for big companies that are producing the products. So we say the process of working out the cost to produce a product or service. In larger businesses, a specialist or a specialized employer called a cost accountant will do the costing. That is what I told you, right? So in a small business, the entrepreneur must know how to do this themselves. So in a small business, you do it for yourself. But in a big company, they employ the service of a specialized person to do that. Cost and manage people that studied cost and management accounting. They got it in CPUT, right? Right. So maybe if you aspire to study that is very good. It's a good career. Then the cost component, right? You have the startup costs. We'll talk about that. The direct raw material. This one is very, very important. We say startup costs, these are the costs that are necessary to start the business operations. We talked about that before. So the money needed for machineries and tools is called startup capital. The money that is actually spent on raw material, machinery, equipment is also called this startup cost. You see, when you want to start a business, you need money. You need to spend money. So whatever is going to cost you to, for example, buy your machineries to start your business, whatever it's going to cost you to buy your initial stock, you know, all those things needs to be put into consideration when you are doing your costing. Then direct raw materials. What do we mean by direct raw materials? We are now talking specifically when you are producing something. For example, let me still go back to that my small business of Maguire. No, not Maguire. Chicken mayo, right? Chicken mayo. I was buying, for example, Uncle Sally bread. You know Uncle Sally bread? Hey man, that bread was very nice. You can't find that bread again. They used to call it Uncle Sally bread. I used to buy that. Two slices of that. If you eat it, your stomach will be full. No matter how glutonic you are, your stomach will be full. Then I used to buy chicken breast. I used to buy cocktail tomatoes. I used to buy cheese, right? I used to buy egg in some cases if I want to produce cheese, egg, and tomatoes. So, huh? Yeah, I was buying mayo. Mayo was, guys, you can't believe it. You know how much I was buying mayo that time, the original one, not this fake one. I was buying it 8 rand something. It was not up to 9 rand. This mayo that you are seeing, I used to buy it. Then I used to buy lettuce. Then I used to buy plastic foam where I used to the platform where I used to put my sandwich. Then I used to buy wrapper, that transparent one. I use it to wrap it. So those ones constitute my direct cost. Do you understand what I mean? That is what we are trying to say here now. Direct raw material. These are, yeah, direct raw material costs. These are the raw material that are involved in the production of a product. For example, to build a bicycle, don't worry about bicycle. I've already given you what it was costing me, which constituted part of direct raw material. Then indirect, right? This is the cost of raw material which are not easily determined, right? For example, I told you about lettuce, right? I've told you about chicken mayo, the mayo itself, I mean. I've told you about the bread. I've told you about the lettuce, the cocktail tomatoes, the grapes, right? What about the salt? I was buying salt, right? But salt, I cannot be able to apportion it. It's not something that you can quantify. Salt. Did you see? So you can classify something like salt as what? Indirect. Indirect raw material cost. Yeah. So it's not something that you can, all those are small, small stuff that you cannot be able to quantify it. You cannot be able to apportion it to a certain, it cannot be apportioned. Let me put it that way, right? To a certain number of or whatever you want to apportion it to. That is, we say this is the cost of raw material which are not easily determined, right? You cannot be able to determine or to quantify it. Do you understand? In short, let's put it that way. Like the example they are giving here in terms of the bicycle. Glue. Can you be able to quantify how many glue that you use to make something? You can't quantify it. String, paper, all those type of stuff. Right? So what am I trying to say now is this. When you are calculating the cost, formulating the cost of your product, you have one direct raw material, those ones that you can be able to quantify, determine the quantity, right? Then you have indirect, the ones that you cannot be able to determine. Then you have, of course, direct labor. Someone is going to work on it, right? To make the production. For example, I was the only one doing it, right? So if I were to be paid, of course, it's kind of a cost to the business because I was spending my time to make the mayo, the chicken mayo, of which I could have used that time somewhere to make money somewhere. Do you understand? So we got what we call direct labor cost, right? To do the chicken mayo, whatever, there are costs of labor, right? Which needs to be paid. So now you have raw material costs, right? Direct raw material costs. We got indirect as well as the labor. So all those things need to be put into consideration. Then, yeah. So all those things we call it primary production cost. Primary production cost. I think I must write it down for you to know. Primary raw material costs, right? Plus direct labor costs equals okay, you got the book there. Production costs. Then the overhead, these are costs that cannot be put down to a particular product, right? The overhead costs, right? You cannot put it or apportion it. I think this is where the apportionment is coming in, where you cannot apportion it to a particular product, the overhead. For example, if you've got an office, right? The office is catering for different things. So you can consider whatever expenses that you have been incurred to pay for the administration or the office, uh, to pay for whatever expenses that are being incurred in running the office as an overhead. Then we got fixed overhead and variable overhead. Fixed overhead is like it's an overhead that remains the same. It doesn't change, right? Such as the rent and municipal rate, for example. Municipal rate, it doesn't change, right? Okay. Then the variable overhead, these are the ones that are changing, right? So we need to know about that, right? For example, the electricity can change, depends on their production, right? Okay. The variable overhead that we can talk about here now. For example, you have if a factory is producing hundreds of bicycles, the water and electricity, well, we've already explained that. So we got indirect labor costs. These are labor costs we cannot be charged to a particular product, right? Such as canteen worker. Okay, now remember, we say we got direct labor, right? We got direct materials and indirect. Direct is the one that you can quantify, that can be determined. Indirect, you cannot determine it. Then you got labor again, which you have direct labor and indirect labor, right? For example, now, when you look at the college, you see the cleaners now, their work can be regarded as a indirect labor, right? For example, like we now, we got students that we are teaching. It can be apportioned to respective students. For example, if I have 200 students now, right? I'm in charge of 200. You go to the other lecturers in charge, but cleaners, they are servicing everywhere. They cannot be apportioned to a specific number of students. Does it make sense to you? Right. So those ones can be classified as indirect labor. Does it mean that those things are not going to be accounted for? Of course, they need to be accounted for because you are going to pay them. You see what I mean? So when you are formulating the cost of your product, all these things needs to be taken into consideration. Because if you fail to do that and you end up costing your product in a way that becomes unrealistic, then you're gonna have a very big problem. Because where will you get the money to pay the cleaner? Right? Because when you sell your product, the income that is being generated from the sales of the product should be able to pay everyone, should be able to settle all your expenses, your direct cost expenses, your indirect cost, your direct labor, as well as your indirect labor. So it's a very hectic stuff for big businesses. That is why they always go for employing a specialized someone that is trained in formulating the cost of production or formulating the cost of producing a product in the company. Like I told you, they've got a specific career that is mostly confined in doing that, which we call management accounting. Hello, switch it up, please. All right. So then the total cost, direct material, direct labor plus fixed overhead will give you the total cost. Hello, you cannot answer your phone call. No, go out and answer your call, please, man. Okay. Now the importance of costing, right? And okay, we don't need to talk much. We know why it is important to do costing properly. You know, if you don't do your costing appropriately, like I said, you are going to shoot yourself in the foot, right? For example, a product that's supposed to cost maybe 5 rand, you say it's 3 rand. Now you've established your cost to be 3 rand. You need to add your profit, right? Then you added 2 rand, which is 5 rand. So if other people that did their costing very well, they are costing it 5 rand, and you now you costed your own three, then you added two. That means your 5 rand as a selling price would be the cost price to other people. You've already shoot yourself on the foot. Did you see what I mean? So you must learn how to do your costing very well. It's very, very important. Right. And it must be realistic. Right. Realistic in the sense that if your costing is not properly done and you end up charging more, working out a higher cost relatively to others, you will end up charging a higher price, right? And charging a higher price, it got its own implications. It will make people not to buy from you in a sense that your prices will not be competitive, right? So those are some of the things that you need to know in terms of or why you are working out your pricing. Quotation, a formal offer to supply goods. You know what is a quotation? Tender. Quotation. Yeah, quotation. Yeah. Yeah. Quotation. Yeah. It's an offer. It's a formal offer to it's a document, right, which constitutes an offer to sell something. Then you put the prices of, for example, let's say we need something now, right? Then my company needs something. Then we can ask you to supply your quotation to me. So that is an offer for you to supply the goods to me. And that quotation must have a price. That means the price at which you are prepared to sell the product to the company. Does it make sense to you? Right. Then working out production costs, as we said, you need to plan for it. It's a process. You got a step. First of all, you have a production plan, right? In terms of the quantity, you need to have a forecast in terms of how much production that you need to make. Then you work around that, right? You need to have a safe forecast. For example, we say a production plan give the detail of what you will make, when, and how many units. Yeah, you must first of all establish it. We are going to produce, for example, you got a bakery, 10,000 bread, right? From that 10,000 bread now, you know how to work out how many kilogram of flour you need, how many kilogram of salt or thereabout, of sugar, whatever, of yeast and all those type of stuff. First of all, the starting point is to forecast the quantity, right, that you need to make. From there, you work out the materials. Does it make sense to you? From the materials, you work out your labor as well as your overhead. Then you plan the cost, working out the cost, then you complete the production cost statement as we have there. So that is how it is being done as far as uh, the costing is concerned. Let me see if we could have example here. You see, this slide is from financial management. I'm trying to make use of the two so that it becomes much more clearer to you. So we say the cost structure here, the structure a business apply when determine the selling price of a product or service, right? We've already explained it. The selling price, what do we mean by, we know about the selling price, right? Selling price must include all the costs and the profit markup percentage, right? For example, how do you work out the selling price? First of all, determine how much it's going to cost you, as we've already explained here now, right? Then you need to determine the top up or the markup, what you are going to add to the cost price, right? For you to be able to establish the selling price. And the markup depends on, for example, the markup is varies, right? You can, for example, you have different business. That is why you need to play around. For example, you can aspire to have a markup of, for example, 20%. Some can say 30%, thereabout. So whatever, but you must make sure that your selling price, first of all, cover your costs, because that one is very important. So whatever you are putting on top is discretionary to you, whether you put 5% or 10%, and it still depends on your other expenses, your overhead. Then the way a business calculates the selling price depends on the nature of the business, like we said. Then when a business buys stock for a sale to customer, it will receive an invoice from the supplier, obviously. Then the cost of each item is specified on the invoice. How many of you have seen an invoice? Okay, good. So delivery costs, these are some of the costs, right, that one could put together for one to be able to establish a selling price. Could be delivery costs, freight, harbor fees. You know what is harbor fees? When you import something in the port, yeah. Then VAT must then be added to this figure to calculate the total cost per item. Then next, an amount of percentage is added to cover the fixed costs such as wages and rent. Finally, then you establish the selling price. Right. So this one is a typical example of, yeah, a typical example of how one it shows how we can calculate a selling price. For example, owner B buy and sell shares. She pay 400 rand a month in rent, which is a cost for her building, and 600 rand in wages to her assistants. On average, she sell 50 chairs every month, right? She buys the chairs for 40 rand each. Then owner B would like to make a net profit of 20% markup. So what should be the selling price? So all this type of stuff we are going to work with us. You see, something of this nature. Right. Well, how many minutes remain? Check the time for me. Huh? Which 50 rand? That is the how much look. That on average she sell 50 chairs, right? Yeah, yeah. But we are going to let me know, crack your brain with calculation today. When you come on Monday, you are fresh. Then we're gonna do that one. But what I want to, how many minutes remaining? 5 minutes. Okay. What I want to discuss again is the pricing policy, right? The pricing policy. So every companies have their own pricing policy, right? We say the price is the amount of money which we sell and accept is exchange. It is important that entrepreneurs charge the right price. It's very important. You must be able to charge. Focus. You must be able to. Hello. You must be able to charge the right price, as we said, right? Because if your price is low, the customer gonna run away from you. Right. There are certain people as well, if your price is too cheap or is too low, they say your product perhaps is of low quality. So you need to be able to strike the balance. So the pricing principle, there are five primary pricing principles which help to understand the concept of pricing. The buyer and the sellers are in conflict. The buyers and the seller are in conflict, right? So this means that the seller always want to charge high, right? The seller always like to charge them, right? Then the buyer always like something that is lower. So there is a kind of a conflict there. But at the end of the day, there must be a point at which both of them will come to a compromise. Do you understand what I mean? Right. Is that thing still recording? Check. Is it still recording? Yes. Okay. So that conflict needs to be harmonized, whereby it has to come to a point the seller will say, okay, I'm prepared to give you the product at this price. Then the buyer say, okay, I can buy it, I can pay this amount. Right. So you must know that the buyer and seller are always in conflict. There are rules for don't there are rules for supply and demand. You know what is supply and demand? Yes, sir. Right. So when the supply is high, when the product is readily available, what is going to, and the demand is low, what is going to happen to the price? It will go down. It will nosedive, right? It will nosedive. It will go down. But when the supply is low, the demand is high, the price will jump up. So you must know that. Take that into consideration. Right? Why do you need to know that? That is why you see, I don't want to bog your brain out with OPEC. You know OPEC? Yeah. Okay. OPEC is a kind of a cartel formed by oil producing nations. So what they do is that they fix a quota. It's what is called quota. When they see that the demand, right, is getting low, they use that one to control the price based on this mechanism, price supply and demand. So when the supply is low, right, what is going to happen? There is high demand. It will push up the price. Okay. Yeah. Yeah, you know what I'm. Yeah. So that principle do applies. Then the price must cover costs. As one of the principles of pricing, make sure that you don't shoot yourself on the foot. right? Make sure you cover all the whole cost. Otherwise, you end up, yeah, being short the food, and then your business obviously gonna close because you wouldn't have. It will make you to be indebted, right? It can make your business to liquidate because it may it will can result to a situation whereby you will be unable to pay your debt, which is insolvency. You become insolvent, right? So you wouldn't like a situation like that. Then price is perception, right? Perception, the individual ways in which people see the world. Guys, price is the perception. There are certain people, when they see something that is of high price, they say, now it's good quality. Do you understand what I mean? Yeah. Pricing is a perception and it's something that can be speculated, right? For example, you see now, Jonga, this is a very good example. When Donald Trump said we are getting to a deal with Iran, right? We are getting to striking a deal with Iran. What happened to the petroleum price? Guys, listen very well. The petroleum price will drop. Hello, listen, listen. Hello, you are on air. Listen. No, don't talk like that. So when they discover that what that guy is saying is trying to bluff, he's talking lies, then the petroleum price gonna go up, right? So it's a perception, based on speculation. That is what we are trying to say. The fifth principle is that pricing is for profit. You must price to make profit. Also, okay, guys, how many minutes remain? Okay, we're gonna stop here. Then next week we are going to continue from here. Factors that influence pricing. Guys, this thing is very interesting. I'm loving it. Yeah. All right, ladies and gents. So I'll just do a con. Is it working? Is it continuing?